Managing your apartment building can be overwhelming, especially when you're constantly dealing with maintenance issues, tenant complaints, and the fear of declining property values. The stress of keeping everything running smoothly while you're trying to ensure profitability can feel like a never-ending battle. In this video, I'll share the essential tips and techniques to streamline your management process, reduce headaches, and maximize your property's potential, giving you the peace of mind you've been seeking. Let's dive in. My name is Stacy. Welcome to the RMFI Academy, where we empower working professionals to achieve financial autonomy through multifamily investing. Okay, so one of the very first things you want to do when you're talking to property management companies, well, for starters, make sure that you're interviewing property management companies that have experience working on the property sizes that you are planning on buying. So if you're looking to buy some 2 to 4 unit properties, you're not looking for a management company that is managing 100 unit properties. Like, it's a completely different business model. Doesn't make a lot of sense. Same thing, let's say you're buying a 20 unit building. You're not looking for someone who's just managing single family homes, because it's an entirely different thing. So when someone is managing their own properties, it's not uncommon to use Excel or Google Sheets, something very, very simple. But as even you start growing your portfolio, you'd need something more robust. Well, property management companies are obviously managing lots of different properties. So if they're operating the bookkeeping on Excel, run. That is not for you. What you're looking for is a professional third-party property management that can be your eyes, your ears, and your brains on that computer. And the whole idea is that you are going to manage them, but they should already know what they're doing. So you're going to ask them, like, what kind of property management software do you use? What kind of reporting can I expect each month? What is your process for when I have questions? And things like that. All right, along those lines, when we're talking about maintenance, remember, nobody's going to care more about your assets than you do. So it's important that you don't just say, okay, here you go, and let them handle it. They're going to handle 99% of things, but you are the leader, you are the CEO, and it's important that you make sure that they're doing what you need to do to maintain your building, maintain the value of the building, and ultimately raise the value of the building. So one of the most important things you can do is at least annually, ideally more than once a year, do unit inspections. It can be a quick inspection by the property manager, go in, do a quick walkthrough. So making sure that your property manager is going to do regular inspections on your behalf is going to help you find out proactively what's wrong and fix it. Not only are your tenants going to be appreciative that you're handling things, you are going to protect your building by doing it. All right, now let's talk a little bit about the tenants. Tenants they're like your clients. They are your guests, and you want to make sure that you create an amazing environment for them. But before you create this amazing environment for them, you want to make sure that they are the right person to walk into this amazing environment. So tenant screening is one of the most important things that you can do to ensure that the people that end up in your property are the people that you want to end up in your property. So you want to ask the property manager, what is their tenant screening process? So just for me personally, some of the things that I'm looking for is I want to know that, obviously they take a full application, probably all do that, but I want to know that they do a background check. I want to know that they check for prior evictions. I want to know that they check for any criminal background, in addition to the credit check. Now, credit check isn't the end all be all, because a lot of people who are renting, they have some credit blemishes. But what I'm looking for, is there anything so egregious that it would indicate to me as a landlord that I don't stand a very high chance of actually getting paid? So you want to find out from the property manager, how do you look at tenants? What are the things that you look for? What are red flags in your opinion? And when I'm telling you this, I know that you're not going to know all the answers or what it means when you're getting it from them, but here's the reality. As you start calling and talking to different property managers and getting different answers, you're going to start seeing that there is a common theme along most of them, and that's where you're going to start really understanding the importance of when 3 different property managers say this is part of their screening process and one doesn't. Why don't they do a criminal background check when everyone else does? All right, let's talk about some other things with tenant relations that are actually kind of fun. So one thing that I like to do when we're taking over a building, and it's always going to depend, of course, on the size of the property and the amenities it has, but we always like to send out a survey to our residents once we've come in and taken over and we got everything kind of squared away and ready to go. We like to ask them, like, what is it about living here that you love? And is there anything that we can do better? And are there any community events that would get you excited? All right, let's talk about something that's not as fun, tenant complaints. Here's the deal. You don't need to be afraid of that. Your property manager is probably so accustomed to it, they're not going to be afraid of it. What you want to make sure is that they have a good, solid process in place to handle any tenant complaints efficiently and effectively, and to make sure that there's follow-up to make sure that the tenant feels like the issue has been resolved. So just ask them, what is your process for when a tenant has an issue or has a conflict with another tenant? So that you can understand whether they actually have their stuff together, that property management company, or whether they're like, ooh, that's a really good question. All right, so you kind of see the difference there. Financial management is really what's gonna allow you to have eyes on what is happening from a financial standpoint at the property. So a regular reporting cadence and the level of detail that you get is extremely important for a number of reasons. First of all, you are the first line of defense. When that property management company finishes their month and they do their cutoff and they end their reports and they send them out, if you're just letting them pile up in a stack, you are not doing yourself any favors. You have to remember that the property management company is managing lots of landlords' properties, and it's not out of the realm of possibility that, or even probability, that they could make a coding error. They might be taking a water bill and accidentally put your property address instead of, Bob's property address, and now you have an extra water bill. But if that report is just sitting in a stack on your desk, you never look at it, you wouldn't know that. So one of the very first things you want to do as far as financial management is review your reports when they come in. And if there is anything that is different than what you were expecting, you want to ask the property management company. And this is for a couple of reasons. For starters, you need to know, because what if it's an error? What if it was charged to you and it shouldn't have been? So that's first line of defense right there. But also, some property management companies have gotten a reputation for taking advantage of landlords. They're taking advantage of landlords who are just stacking their reports in a corner. So if nobody's ever looking at the reports, they can slide all sorts of extra expenses in there and nobody would know different. So anytime you have a question about anything, you want to ask. Even if you're like, I pretty much know everything, it's 100% okay to call them and just say, hey, I just wanted to ask a question about this one thing. Because what you're doing is you're letting them know you're one of those landlords that are actually reviewing every line item on your financial statements. Because if they are the type of property management company that's going to try to put through some extra expenses, they're not going to do it with you. You are the one who's going to control how your property is run. Now, let's talk about the revenue side of things. Revenue is the lifeblood of any business. And in our business, in multifamily real estate, revenue is primarily rental income. It can actually be other things like storage income, premium parking. You could have valet trash. You could offer like premium internet where you get a little bit of a spread. So there's lots of different revenue things. So with income, you want to make sure every single year that you're doing a rent study. Now your property manager should be doing this as well, but you always want to validate what they're looking at and what they're doing to make sure that you agree. So if you have even an Excel spreadsheet from your side that has every single unit, who the tenant is, how much are they currently paying, and what is market, and then over on the right, you have a space for like, what is the plan to get that unit up to market and over what amount of time? So sometimes when you take over a building, there's a really big delta or difference between the current rent and the market rent. So for example, let's say that you're buying a building and one of the units is $300 under market rent. So let's say it's renting for $900 a month, but everything else that's a 2-bedroom like that one is running for $1,200. Well, what are you gonna do? The reality is if you try to do a $300 a month rental increase for that tenant, it's unlikely they're gonna stay. So every single unit, it's almost like every unit has its own business plan. So you have to look at the situation. How long have they been there? And what amount of rent will you be able to increase without them moving out? Now, if it is just so far different and the building just needs massive renovation, then it is what it is, and you're gonna have them move out so that you can renovate. But otherwise, if you can work with them to come up with a rent amount that starts to stair step them closer and closer to market, overall, you're gonna be best off financially in the long term. There is so much to learn when it comes to multifamily real estate. One of the things that we have for you guys is free resources. So we've done 8 masterclasses. I mean, we've probably done 100 masterclasses, but we took 8 of our best masterclasses and we put them on a page and we made it available to you, to the public, so that you can just get more educated and really start to understand this business so that you know what to do going forward. Anyway, there are 8 masterclasses. They're awesome, and you can get them for free by going to warriorsofwealth.com/podcast. And you can look in the notes below and see the link there. All right, let's talk about something that is completely unsexy. It is the opposite of sexy. So this is legal and regulatory compliance. Who wants to deal with that? Part of the reason you really want to have a third-party property management, because there is something called fair housing laws. And man, if you break any of those laws, you break any of those rules, there can be significant consequences financially for you and for your property. So when you are dealing with a professional property management company, like that's literally part of their job, is to make sure they're always in compliance. Now, let's talk a little bit about landlord-tenant laws, because that is something that you can be a little more aware of that will impact your decision about where to invest. So ideally, you want to invest in areas that have laws, when it comes to landlord-tenant laws, that are not so favored toward the tenant that it's just awful to invest there. And I will give you a couple examples of that. So California and New York are well known in the investing community for being states that it's just not fun to own property as a landlord there. And the reason is that the laws are so biased towards the tenants that when you try to evict someone for non-payment, it takes forever to get them out. But guess what? You're still on the hook for the mortgage, the property taxes, the insurance. So that can drain your bank account very quickly. I will give you a state that has, so far, my favorite landlord-tenant law balance, and that is Indiana. So Indiana is considered very business friendly, and as such, they are also very landlord friendly. When I reviewed the laws there, it didn't seem like it was out of balance, but you could definitely move quickly when someone isn't holding up their part of the bargain and get that unit back on the market and get rent coming in so that you're not taking a hit on your rental income or your cash flow. All right, let's talk about what happens if something goes wrong. And by wrong, what I mean is there's an issue and you're gonna have to make an insurance claim. For example, I'll share all of the exciting things that happen in our life in real estate. We have, this is actually just a single family home. This isn't one of our apartment buildings, but we had a single family home, and a few months ago, this little old lady was driving, and I don't know what happened. She just got flustered and she ended up not turning her wheel far enough, and she literally ran right into our house and did significant damage, knocked the house off the foundation slightly. So it was a big deal. In general, I am not a big fan of making insurance claims. So if you've never heard this before, I really wish somebody would have told me when I was a new investor. So I'm going to tell you something. Unless it is a big deal, you do not want to make an insurance claim. And the reason is when you do that, it follows you for years. And even though you're holding property, you're probably holding them in different LLCs, at the end of the day, the insurance company wants to know who's behind the LLC. And if you've made claims before, unfortunately, it's gonna go against you. Sometimes you have no choice. Like in that particular case, I really had no choice. I had to claim insurance because it was a massive repair. But generally speaking, I will tend to carry a little bit higher deductibles because I know if it's anything that's fairly minor, I'm not making an insurance claim on it, because long-term, it's gonna cost me a lot more to do that. So I can at least save some money on my insurance premiums by taking a higher deductible. And I just have a savings account. If something small happens, I can cover it. So you always wanna make sure that your insurance policies are up to date. Now, if you have a lender, and of course you probably will, your lender is not gonna allow your insurance to lapse without them absolutely freaking out. So it's unlikely, if you have a loan on the property, that you'd be able to allow your insurance to lapse, because if nothing else, the lender's gonna go slap on insurance. And why is that? Why would the lender go put insurance on your property? Well, if you think about it, they're the biggest investor. So if you have a property that's worth $1 million, or you bought it for $1 million, they probably lent you $700,000 of that. So they're protecting their $700,000 loan by making sure that you keep insurance on the property. So always make sure that you know when your insurance is coming due. Are you paying it once a year, twice a year? Is it coming out of your mortgage? Do you pay it as far as like principal, interest, taxes, insurance? Whatever it is, make sure you know what the playing field is. Because I'll tell you, within our own portfolio, we have so many different things because we have tons of different lenders and tons of different properties and different areas, and our insurance is different with all of them. So just make sure you create some kind of system that you can make sure that your properties are always staying insured, and gosh, even more importantly, that they're insured for the proper amount. So, it's very common for people to want to get the cheapest insurance possible, so sometimes they'll accept the lowest amount of insurance possible, which is fine until something goes wrong. and then you don't have enough insurance to actually rebuild the property, or you have loss of rents where your tenants are out for 3 months and you have no income coming in. So really make sure that you go through your insurance policy options with your insurance agent so that you can make a reasonable assessment of how much risk you're taking on, is it worth it, and what would happen if something went wrong. Because this is real estate. Eventually, something's gonna go wrong somewhere. We just never know where it's gonna be. So anyway, make sure you talk to your insurance agent, get educated as much as possible so you can make an informed decision about insurance. Okay, let's talk a little bit about enhancing and increasing your property value. You know, this is one of the things that when you're a new investor and you just don't know any differently, it's really common to over renovate properties. And the reason is because we're looking at the property from our own lenses as, you know, homeowners. We want things to look a certain way, etc. But when it comes to apartment buildings and anything that's 5+ units, the value of the property isn't based on what it looks like. It's based on how much net operating income it has. That said, what it looks like could attract or deter tenants. So I want to make sure that we differentiate that so that you understand that when you're making a decision about a capital improvement, that you understand the impact of that decision. So let me give you an example of that. Let's say that you bought an apartment building and it is just, it's like the ugly Chihuahua. It is just no bueno. It's very ugly up front. Well, you know, something that is that unattractive most likely is not going to show well when your property management is bringing people in to show them the unit. So that's going to tend to keep your vacancy expense higher. So for that reason, and that reason alone, it would be worth looking into upgrading the facade or what the front of the building looks like. But you're not just doing it just because, you're doing it because it's going to end up bringing you more income. And every decision that you make when it comes to any capital improvements on apartment buildings has to be made through that lens. Otherwise, you are probably over rehabbing. And the fact of the matter is, if there's no increase in the net operating income and you're making that improvement, you're doing it, it's sunk money. It's money that you'll never get back. Now, it's a little bit different if we're talking about something that's related to safety. I'm not talking about that. You always, always, always have to give clean, safe, and functional housing to your tenants. So, but aside from that, when it comes to aesthetics or anything like that, and you're going to spend money, make sure that it is tied to an increase in revenue so that you actually get a return for that. All right, now that you know how to manage your apartment building, let's help you understand how to find the right property manager, how to manage it, and what major pitfalls to avoid. I made a whole series of videos that go deeper into each of these topics. Click the video that's on your screen right now, and I'll see you there.